Hey, hello friends, this is Martin from Brokerage, the channel for learning about trading and invest. Welcome to Markets Tomorrow, daily stock market analysis show where we look at the technical charts and then try to understand what happened in the market during the day and also plan for a bit of trade for the upcoming day. That's February 16th, Friday, 2024. If you're not subscribed, please subscribe and share with your friends and colleagues so that it reaches out to max. Thank you. So we had a green day with some momentum and price gains in the indices, and probably the market is hoping for another breakout because it's very close to that, especially the Nifty, although Banknifty is quite far from it. Are we heading for that, or are we going to face some resistance heat out there? Let's try to understand that in this analysis briefly. This is a wrap of what you're studying. All details must be good enough except for the FI and the institutional selling part, which is not come in yet for today. Let's get in the charts. Before that, you may be interested to see this chart that I had shown yesterday as well. See the kind of flag patterns. No, this shows that our market is definitely trending since last couple of years. Right, breakout of cup and handle, and then flag 1, flag 2, flag 3. Previously also we had multiple steeper flags. Right? Same with Banknifty, we're having much more volatile, bigger flags down there. Right, that's how market moves, not like a rocket. Right, it moves up 2 steps and then takes half a step back and then another 2 steps, 3 steps, and likewise. Right? So let's just see the charts and then try to understand what are the candlesticks today. You can hardly see the body of the candle, so that's a doji. That's a very good doji. Dojis have very small bodies with long wicks on both sides, and that shows the indecisiveness in the market. Especially that particular index, the market is kind of halted after a big move or volatile moves the last couple of days, and then it just halted very close to 200 points or something to the next all-time high. Then we had a volatile Nifty weekly expiry also that happened today. So that's indecisiveness that's projecting outside, but still market managed to close 71 points up. Look at Banknifty. It had a decent show as well. It has gained 311 points and it has formed a green hammer. And interestingly, it has not given up the 20 exhibition moving average, which it had gained yesterday. Neither has it forgotten to take out the 50 exhibition moving average and comfortably closed above that. That's really good. Banks have set the foot in the channel. If you look at this blue channel, it has entered the channel. Now we'll have to see if it sustains that or tomorrow. We'll answer that. Remember, we had the same blue channel from where it had fallen, then it had moved up, failed to hold that levels at 46,900 nearby zones, and then did another dip, retested it, and then once again it has climbed back with the blue channel. Right. So now it all depends on whether it's able to sustain above 47,200 at least before it can move to the all-time highs in the chart top. But at least it has cleared the 20 exhibition moving average. And also, we'll come back to that later. Meanwhile, in the Nifty, we can see that it is already made a new all-time high a few years back and completely recovered the 4.5% of small retracement that he had done in a 31% of rally, and retraced further once again 2.5% and then halted it there last 3 days. It's great. Now it's back to the same zone where it had failed 3-4 times before. The zone of the 22,000 and the 22,100 all-time high at levels. So we have to be slightly careful because they can form an M pattern. And Nifty, that's Nifty that we talk about. So that's the two. It's also, if you put the Bollinger Bands, you can see the Bollinger Bands is comfortably contracting, and it is just started at the beginning of an expansion upside. If it confirms tomorrow, that could mean that it could easily go to the 2500. As of now, it shows that there can be it's in complete consolidation. It's sideways. That's what it's indicative as of now today. Banknifty also Bollinger Bands showing that it is contracting, it is squeezing, the volatility is reduced, and it is squeezed in, and it indicates sideways movement or contraction as of now. But the beginning of a small expansion of the bands on the upside has begun. We'll have to see that tomorrow if that confirms that or not. As of now, sideways is what is indicative of Bollinger Bands on both indices in the short term. Another interesting pattern that we discussed yesterday also is the volatility divergence, where the price moves outside of the bands as one leg and then put another leg inside of the band and then forms a W pattern. This is a setup which is bullish in nature, and if neckline of that, which is for 6500 nearby zones, if a green close happens above that, it could equally be moved as much as the height of the W pattern. That means it can at least go near to the all-time high if that works out. And same pattern can be seen on Banknifty also. Bollinger Bands are here. It forms an outside leg outside of the Bollinger Bands and an inside leg, and then it's forming a W pattern slightly sideways, and then it can break out and go beyond the 2500 also. That's one of the targets of the W pattern if it has to work out. At the same time, you have a M pattern that is there, which is negative, which could play out to be negative on the downside. So there is patterns on the both sides that can be seen there. So that's what it's all about. Let's just try to quickly see. So 71 points gains, Doji candle, 300 points, 0.7868% gain on Banknifty, hammer pattern, and Doji on Nifty, hammer on Banknifty. Hammer does not have much significance because hammer has significance if it's in the top of a trend or the bottom of the trend. It's in the midway in the Banknifty's case. So may not be delta 11, but whatever be the case, the reversal to the downside of, so if at all, if you consider that as a small trend, it will happen only if today's candle's low is breached. Right, keep that in mind. Candlestick pattern analysis is what we're talking about. So the main thing today is that it has reclaimed the 20 and the 50 exponential moving average also, and all moving averages are clear now. So that's something it was struggling to do since a long time. We'll have to see tomorrow if it sustains. Banknifty had a deeper correction of 8.5% and a shorter rally of 26% as compared to Nifty, which had like 31% rally and a very shorter 4.5% retracement only has been done. Intraday it was very volatile, but it was trending in the upside. There is resistance out there. It is facing to the expiry day, obviously. There was resistance at the 21,950 nearby zones and also at the 46,500 nearby zones for the Banknifty. So it is probably heading towards the resistance zone. So we have to see how what's the institution will do tomorrow. So yesterday there was a big sell-off that has happened from the Fyers, who were buying in small quantity for the previous 3 days. So that kind of big sell-offs, unless it is managed by the DIs in a big way, it can be a problem. So we had big sell-offs yesterday. It's a concern. So it all depends on what the institutions are looking at. Right. Inflation had come out with more than what was expected, and that's the reason probably that sell-off yesterday happened. So you know how it's going to be today. So each day they're playing. That's not how there's no consistent approach of buying or selling that is happening from the FI side. One day, mostly the selling that's happened from the FI side during the January month and the February also so far. But the entire 1 month the FIs were buying only. So as of now, it's a mixed pack of small buying and then big selling once in a while. That's what is happening. So today's data is not coming. We can just refresh and see if it is coming or not. 15, yes, it is coming. So today also FIs have sold 3,000 crores. This is not great. So 3 days, 7,000 crores is the cash market is gone just like that. That's kind of selling that is stopping the market to move further up. Interestingly, BS have been constantly buying. Today also they bought 2,276 crores. So that's what holding the market. The Fyers they know about the buys for sure. Otherwise, they wouldn't sell this much in just a matter of 2 days. Still, the market is moving up. Still, the market is moving up. That's retail money, the mutual fund money. That's holding the market. Pre-election rallies got everyone is shopping, but the Fyers selling has to stop for any breakout, if at all, it has to happen. Yeah. So that's about the institutional levels, the institutional buying and selling that happened. So if you look at Christian support levels, we already seen that. Not repeating that. It's more or less the same. And we have the big resistance at 22k, and we have. Did we miss to look at these resistance support levels? Yeah, I think we missed to look at that. Let's do that. So resistance support levels, the first one would be the 22,000, big rounding number, then all-time high 22,127. Then it can be all rounding numbers up there till this 22,500, the top of the trend line channel. All of those could be resistances, but maybe not for tomorrow, maybe for the next week. Downside, the first support will come in as 21,700, which is 20 exponential moving average support, which it was trying to hold on earlier. And 21,400 is the next support, that is again the 50 exponential moving average. And that is also in confluence with the 50 exponential moving average. It's also in confluence with Fibonacci retracement 23. Right, so that's after that it goes to 21,000 and 20,950 has got a gap support also. That is supports and resistance on Nifty. And Nifty has conquered the 46k along with 50 exponential moving average today. So the first hurdle will be to clear the 46,500, which is kind of a top of the yellow channel down there. So if it is closing above that, it means it will be breaking out of it. Right. There is another violet channel that we can see there, that is also coming at 47,500 levels. So the first hurdle would be 46,500, then it will be 47,000, and then 47,200, which is the consolidation breakout, previous two highs, and then 48,000 is the resistance upside. Downside, 50 exponential moving average support at 46,000 would be the first support, 20 exponential moving average at 45,880, and then 100 exponential moving average at 45,650. So these are all supports if gold is falling back. Potential. But the final support is the 44,700, which is 200 exponential moving average, and it's very close to the previous three lows at 44,429. That is breached, it goes to the 44,000 nearby, where a gap also is there. Support, right? So that's the resistance of the Banknifty. Let's get back to the momentum and the trend. Momentum, we are using the RSI. Trend, we are using the ADX. Momentum is sideways and rising up, not a bullish on both indices. Trend is crossed over the bull zone slightly. Weak strength of the Nifty, but Banknifty is still struggling to have that cross over the bull zones yet. Still bearish. India weeks is kind of flattish close, but negative, and slight cool off of 15.22, but it's still outside of the low volt regime between the 10 and 15 that we were enjoying for a long time. Well, Japan's we already studied that it is indicating sideways movement, but it's also showing an expansion on the upside and both of that. We'll have to get the confirmation next day. As of now, it's potential sideways contraction that's happening. That's what it's predicted by both Japan's. Technically, so indices has gained, continued to gain, and some sideways momentum more or less. Trend is set to close over Banknifty also. All the bands indicate sideways. Patterns are bullish. W pattern, we already seen that. Candlestick is all bullish patterns. Slight indecision, that is only worry. So that indecision makes you think, would it become an M pattern downfall or will it become a W pattern breakout? That's a question for us. Now if you understand the major sector in Japan, it is a green tail except for FMCG pharma. And IT, auto, pharma, all of these are getting bullish momentum. Metal realities and sideways, and FMCG has fallen back, and the VPL forms with daily charts, short-term momentum. Heavyweights are close green except for the Reliance ITC and two banks, ICICI Bank and Kodak Bank. They are still they're not green, they're close red today. Lines and days, otherwise it's maintaining the bullish moment in the short-term charts, and others are all maintaining sideways. The trouble is with HDFC Bank and ITC that's maintaining the bearish moment on the daily charts. US Industrial Bank showing greenback after a small correction dip after the inflation data came in, and still at the top and ultimately close to the all-time high levels, and has been rallying just like ours. Dollar has fallen to around 4.5 rupees. Continue to be weak, very close to 83 where it is managed by the RPI. Crude oil is flat red at 76, and it was earlier trying to move up after hitting the bottom of 70, 75, that's levels. And we have the gold that's back at the top node, ready to come down after recently having hit the all-time highs. So every dip that we have, like we had a few days back, are potential buying opportunities for long-term investment in quality stocks, which is IP more, as I always say. But for a trend of direction that matters, the direction is not bullish yet to go long. So slightly bearish, slightly bullish, you can have bear calls, bull spreads, and all this kind of spread combination if you're not sure. Right? Still want to go direction, right? Have a hedge position and a hedge spread instead of buying naked. Always have hedge positions if you're carrying forward. And direction as of now seems to be sideways. So although it's not no risk, although the black volatility realized volatility spread difference is not in very much favor of the options. Tomorrow is a day for buying an option for the weeklies. Buying in the sense taking positions, either down direction, whatever strategies that you're coming. Tomorrow, Fridays will have more premiums as compared to taking the Monday. Yeah, less premiums, right? So take it tomorrow. After half an hour or something, you'll get a view on the range the markets may be bouncing for the next week, right? So that's all I have. If you're watching this and not subscribed and watching this, please subscribe right away and share to friends and colleagues so that it reaches out the max. Also, putting your feedback, comments, and all of that, it would help us a lot. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.